Gold is still hanging in there above $3,400 an ounce, and that's saying something, especially when you look at the rest of the economy, like the U.S. housing market, which just slipped again. Existing home sales fell 2.7% in June, according to the National Association of Realtors. That brings the annual pace to just over 4 million units, lower than economists expected. So if you were hoping the housing market would offer some stability, well, surprise. And if you're wondering how people are helping protect themselves in this kind of climate, here's one option that folks are exploring: holding physical gold and silver through a retirement account. Goldco offers a free guide that explains how to do it safely and within a tax-advantaged structure. If that sounds like something you're interested in, there's a link in the description. No pressure, just info. Now back to real estate. It's in a strange place. Prices are still climbing while sales are falling. The median existing home price hit $435,300 in June, up 2% year over year. And that's a record high for the month. That's 24 months straight of rising home prices, 2 full years. You'd think gravity would kick in at some point. Inventory is still tight as well. The number of homes for sale in June was 1.53 million units, which gives us a 4.7 month supply. That's not enough to ease pressure on prices. So even though people aren't buying as much, there's also not much to buy, like at a dinner party where the food's both overpriced and already eaten. Meanwhile, gold's just hanging out, quietly doing its thing. Spot gold recently sat at $3,418 an ounce, according to Kitco's market data. Not spiking, not collapsing, just kind of holding the line. That kind of resilience is what makes people take a second look, especially when other options start to wobble. Mortgage rates are still high, sitting around 6.75% for a 30-year loan. And the Fed hasn't made any bold moves yet. They're holding steady, neutral stance, no cuts, no hikes. Markets are anticipating a potential rate cut soon, but that's still a maybe. And that uncertainty, it's why people may start thinking about stability. Lawrence Yun, chief economist at the National Association of Realtors, says mortgage rates are keeping home sales stuck at cyclical lows. He estimates that if rates drop to 6%, around 160,000 renters could finally buy homes. But until then, most folks are just sitting on the sidelines, waiting, watching, and wondering what the Fed will do next. And here's another wrinkle: underbuilding, years of it. Yoon points out that new construction has not kept pace with population growth, which means demand keeps outpacing supply. Even in places that seem oversaturated, it's usually just temporary. So if you're waiting for home prices to crash, maybe don't hold your breath. Back to gold. It hasn't skyrocketed on this data, but that's the point. It's staying stable while other sectors fluctuate. When borrowing gets expensive and home prices stay high, people look for places to store value, places that aren't as volatile. And gold, it's the strong, silent type. Doesn't make a lot of noise, but it shows up when it matters. So if you're holding retirement savings and you want to learn how others are using physical gold and IRAs to help build long-term security, Goldco has a free guide you can request below. They're also offering up to 10% back in bonus silver on qualified accounts. Pretty good deal if you're into shiny things with historical value. Now, no one knows exactly what happens next. The Fed could cut rates, the housing market could thaw, or we could all just keep squinting at the economy like it's one of those magic eye posters. But one thing is clear: gold is holding steady while other assets are feeling the pressure, and that's why now might be a smart time to pay attention.